Hello fellas, and how are you doing on your isolation vacation? Now I'm telling you how my friend here Bill Ackman is doing right now. He is doing pretty well, $2.6 billion well, and I'm telling you in this vlog how exactly he made this money, and also let's have a look what he just said in an interview on CNBC.
Every hotel is going to be shut down in the country. Everyone.
Hang on just 1 second. You say Hilton is going to zero? I mean...
Oh, no, again, I'm a major shareholder. What I'm saying is, if we allow this to continue the way we allow it to continue, okay, every hotel company in the world, okay, is done, okay, because no business can survive a period of 18 months without revenue. Okay, and stick with me, and that's what happens, okay, if you operate the way we're operating now, okay? Now, let me give you, so that's a very, very bearish thought, okay? And I've been super bearish, but I got bullish, okay? And the reason why I got bullish, and I've been aggressively buying stocks, including Hilton, today, okay? And I've been buying all the way down, Hilton, restaurant brands, Starbucks, walk your way through the only stocks I'm not buying are companies who are on the board and I'm restricted. But the reason why is the only answer for the world is to shut the world for 30 days.
So the guy who just told us that we should shut down everything for 1 month, the whole world basically is making $2.6 billion in just 1 month with a capital investment of $27 million. Now this is 100-fold, and how he did it and who he is, all about it here in this vlog. So Bill Ackman, the guy with the gray hair and very youngish face, is a hedge fund manager. In 2003, he funded Pershing Square Capital, which is a hedge fund, and he actually, have about $8 billion under management, and currently he is all over the news about his critical CNBC interview. However, he actually went really fame when he was betting on zero. This is a documentary. This is how the title looks on Netflix. You should really look into it because it's quite interesting how he made a short and Carl Icahn, another billionaire, make a long call on a company, and they, in the PRs and marketing and interviews on TV, made a battle over this company. Very, very interesting. Make sure to watch this so you know who's Bill Ackman. In other words, he is a billionaire that is really known for his active trading and shorting companies, and he went on CNBC on a very serious interview, and what he told on this interview and why it got so many views online. Let's have a look. So recently when he went on CNBC, he went live on air via telephone conference, and it was so bad that CNBC thought to bring him out of this interview and cancel the interview because they thought he drags down the whole market. It was anyway a very bad market day, but he went on air and talked about a very serious of things. So first of all, I think partially he is definitely right. The only solution is a wide, very wide, and or even global shutdown for 30 days to really decrease the spread. But on the other side, he's also saying something like this: could survive companies, because if this will drag for a couple of months, everybody is shutting down after each other, this is obviously not a very coordinated move and can inflect the supply chain and also the demand. And he said that hotel industry, travel industry, everyone will go out of business if they don't have revenue for a couple of months. Obviously, nobody have this, emergency fund. We can just see it in the airline industry or other industries that, they are going bankrupt, even though they had lots of money and lots of profit that they used for stock buybacks. And, in the end of the day, you cannot be very aggressive to them or very mad on them, because in the end of the day, this is something that a company usually do if they have, generating cash to buy back stocks. This is something also what Warren Buffett is recommending also to Apple. When Steve Jobs called him up and say, hey, what about with all the cash that Apple has, what we should do? And Warren Buffett say, hey, buy back your stocks. So this is a very common thing in the investment industry, and therefore you cannot be mad about this, because who knew that a global health situation like this will impact so many industries and us as a humanity. So therefore, this was the interview, and it got hundreds of thousands of views when CNBC posted it online. I will put the link into the description if you are interested in this 15-minute long interview with Bill Ackman on CNBC. But let's now get to the meat to know how he made from 27 million to $2.6 billion. Okay, let's just figure a bit about the numbers. So he took $27 million and turned them into $2.6 billion. Let's just have a look here. So $27 million and $2.6 billion. $2.6 billion is about $2,600 million. So you can see that he actually 100 times the money within 1 month, and how he did it is quite interesting. And before we going into the mechanics of the trade, it was one trade, it was one position, and he actually turned this gain to his overall hedge fund that made 7.9% gain for the overall March months, while the S&P lost 17%. So he gained almost 8% and the S&P 500 lost 17% at the same time. So this is why people turn to hedge funds, and this is the word hedge, because hedge funds maybe sometimes don't make so much money when the market goes up, because they are hedging, they are shorting some companies. But the beauty about hedge funds is really that when it goes south, and it happened every couple of years, then hedge funds or good hedge funds really saves money to the very rich people. So what he actually purchased was, or how he betted on increase of the corporate bond indexes, and also he betted on credit insurance on those corporate bonds. Because what happened in such a great sell-off is that corporate bonds, so the bonds that corporations can issue to gain money for merger and acquisitions, to investments, operations, and so on. If they need money, they can issue these bonds and this long-term debts which investors can buy. And those went so much down because many people thought that actually corporations will go out of business of this crisis. And obviously this is a very high fear that was created over there. And he said, like, wait a minute, I think the US government will not make the same mistake like they did in 2008, where they fed barely, did nothing, where we lost Lehman Brothers and the government couldn't figure out to save this bank, which, collapsed, actually ended, into a deeper dive for the whole market. And, he was betting on that, and he said the rates on that was so low, like almost ever low, and therefore it's always about the risk and reward, and he saw that the risk potential is actually not that big. So he had very low risk even in this deal and gained so much money, because within 1 month he gained so much money, 100 times the money that he used for this deal. I'm sure he is very happy, but he's maybe also not that happy that he just put in $27 million when he has over 8 billion in management. So I think when he have put $1 billion, then he would have now $100 billion. However, you know, winner, winner, chicken dinner. So that's why I think it was a brilliant move. I think this is showing his ability for leading this fund. And also after that, he actually, and he said this also in his interview, that he's slowly buying into stocks. He's reducing his short positions very, very much, and he invests into companies like Hilton, for example, or he invests in Starbucks, and he's betting on America. And I think this is, you know, a very, very nice word for the end. If you're betting on America, it's a very good probability after all this ends that you will get out of this much more wealthier. Obviously, if you got hit by the sell-off, now you could gain a little bit more, and maybe we will test new lows. This is what I'm personally thinking, and also I saw a couple of experts that are sharing this opinion with me. However, I think that we have, or at least will have, one more opportunity with the same lows we had on the 13th of March, or even lower. This is actually, according to history, 70% of the case that can happen now after such a run or a rally, after this dead cat bounce. Usually this goes in 70% of the cases further down and testing the previous lows or even lower. But you know, this is just looking into the history, what happened before, and therefore, you know, let me know what you want to know in the comments about this deal. I think it's just brilliant and sees how many opportunities you have on the stock market and the investment world if you're staying on the right side.